Crude oil WTI last week breached past 82.6 levels and in fact has gone close to my next target at 83.5 levels but failed to break that. Now what to expect? Yes, it is trading outside this bearish channel. Can we expect it to rally from here, or is it going to fill the gap on the downside next week? Which position you should take trading crude oil and WTI? We will see with the help of charts followed with indicators. Towards the end, I will give you the trading strategy for next week. Do watch till the end. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon which keeps you updated with the twice a day analysis and targets which I share for crude oil every day. So do press the bell icon. Let's start. First, let's have a look at the chart. Now see, these are the daily charts and see, since last year crude oil has been trading in this bearish channel. It has achieved the lows there at 65. Remember, those who had watched my previous analysis long time back, I told you on the downside 65 is going to be the next support levels and it may try to achieve those levels. It did and bounced back. But now look at this, it has already breached the channel on the upside and looking upwards, looking bullish. Yes, the levels here at 79.5, 79.8 is going to be the support levels for crude oil for now. With that as support, we have seen it giving a breakout. This also has got it outside the bearish channel, the long-term bearish channel. That is the first part to it. Next, on the daily charts, there is a much of gap which is left there to be covered on the downside till 76 level. But right now it appears it is not willing to look downside. Now see, after a couple of big bullish candle, it is trying to form this flag. And once it stays above 83.5, certainly next week, you can expect that the next target is 85, and beyond 85, we may see it hitting 88 and 92 levels in the near future, though it is going to take some time, but certainly these are the next resistance level which it might try to look at. So yes, above 83.5, stay long for 85, which is the next resistance. Here you can see this multiple candles hovering at around 85. This is the next stronger resistance. Beyond that, it is going to fly high for 88-92 zone. So above 83.5 stay long. That is what we can summarize here. At the same time, on the downside, now see higher lows, lower highs. If it breaks past below 81.6, here you can stay short here, but then also you should be watchful of 81 and 80 levels only and only. If you see it trading below 79.8, further bearishness is going to be seen. Now look at the weekly. Same observation is on the weekly charts. Now see why these lines are important on the downside. Here see precisely the support levels at 65. You can see the long term higher lows what we had seen in last couple of years. It has respected the bottom of this and now trying to reverse. Also it is giving a breakout out of this bearish channel and hence it can try to achieve first at 90-92 zone and then in fact 9800 levels before it looks forward to any downside. Now remember, higher the fuel prices, higher the pressure on indices. It is going to increase the inflation and in turn things are going to get expensive. In turn, the central banks are bound to increase the prices, increase the rates, and which in turn is going to bring the bears for the indices. However, it is not so easy to correlate so, and hence we have to only stick to the charts and not go by the news. That is what I am trying to say. Right now it is looking upwards. It is possibly going to stay a little bullish. Now look at the monthly charts, and on the monthly chart, see the previous candle had a longer tail, and that is what I have told you, that once see the body size is smaller, the tail is bigger, it means the prices are not willing to stay at lower levels and we can see an upward push. That is what we are seeing here. It has breached past 81, it has breached past 82.6. Now I will wait for it to stay above 83.5 and then 85. If these two levels are taken, you can expect that the next target is going to be 90-92. Now what it is trying to create, you can draw a parallel here on the monthly charts and you can see this. So if you draw a parallel from the bottom there and the highs here, connecting these twin peaks, you will find that now for next couple of months, for next few months, oil is trying to retrace back to 90 and $100 zone. This is going to be the highs which it is looking forward to, and this it may try to achieve in a rapid pace such that achieving the highs, it can start its downward journey again. See, it is on the monthly charts. I will still take it is in a bearish channel and it is still further downside to cover, but it is going to certainly take a little longer time. Now we have seen the charts. Let's have a look with the help of indicators, and then in the end I will summarize. If the observation with help of indicators are in sync with the chart, then certainly we can take the trades on the bullish or bearish side. Now look at the first look at the Bollinger Bandwidth. It is far above 885, 86 levels. In fact, it is beyond that. And if you look at the 20, 50, 100 period simple and exponential moving average, first of all, the exponential moving averages have crossed over. This is the 20 and 100 period crossover. Previously we had seen the 20 and 50 period crossover. So this is now back to the bullish territory. At the same time, I will wait for it to break cross the 50 and 100 period moving averages to cross over. This is going to be the next bullish indication. Yes, the super trend is also given a buy signal. It is trading in green and with the support at 76. So this is something. Now look at the stochastic. This is trading overbought, near to overbought. See, it was trading overbought, retrace, and now again back to overbought levels, and hence a slight retracement cannot be denied. Look at the daily MACD. This is trading bullish and it can start to converge. However, it is lot much to cover. Now see, look at the near term movements for crude oil. Minus 200 plus 200, this journey is complete. But when it was in 22, look at the highs. It is scaled to plus 300 plus 400 levels, and certainly if it stays about 85, and that is also makes 85 levels as a good stronger resistance, because see, once it stays above 85, then it has to achieve further higher levels, and else right now it is trying to converge. See, the candle size is diminished here. Possibly if it starts to diverge, it can again look upwards, but then that will also bring fragility to oil's prices. The RSI is also trading very near to the high levels, very near to the top there. And if you look at the weekly charts, the weekly Bollinger Bands are at 85, which is very good resistance. Yes, the 20 period moving average have started to look upwards. This is a good sign. It is trying to trade bullish here, and I will wait for this to cross over above the 50 period moving average in order to confirm a rise. The stochastic is looking upwards. The MACD has crossed over. Here it is trading with bullishness. It is divergent. It is looking upwards. And see, it is first crossover, second crossover, third crossover. And this indicates that oil is bound to bring bullish weeks ahead, which means $95, $100 levels can be seen in the next few months, next few weeks, or couple of months or more. We may see it hitting $95, $100 zone. Remember this fact. RSI is looking upwards, trying to stay bullish on the weekly charts. Now let's have a look at the monthly chart. On the monthly charts, now finally it is trading above the 20, 50, 100 months average here. This is a good sign for oil. The stochastic has also now recovered and looking upwards from the oversold zone. The MACD is however bearish and it is trying to converge crossover. Now see, if you track the oil's movement, you will find, now see, the rise started here in 2015, achieved one high, then this drop, then the second high, then this drop. Now it has achieved the drop. It is again started to look upwards. This is a good sign. It can achieve the highs of this channel again. The RSI is also started to look upwards and show a little strength. So now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategies so that you can trade profitably next. First, let's talk about the levels to buy. And yes, 80, now see, 82.8 and 83.2 zone, 83, 83.2 and 83.5. Now these levels need to be breached successively in order to confirm the rise, confirm the bull trend, confirm the breakout. And hence you can keep booking, keep cautious, or keep a trailing stop loss of $2 or 20 cents. Once it breaks out beyond 83.5, stay long, and we are directly looking forward to 84.5 and 85 levels. Yes, it will almost going to give you $1 more. If it stays above 83.5, more bullishness is going to take it for 84.5 and 85 zone. Beyond 85 also it is possible as 86.35 and 87.2, 88, and in fact we may see it hitting 90 also if it trades above 88 levels. So take your trades accordingly, and these levels are applicable not only for next week but next couple of weeks also. If you see it successively trading above 85, it is going to stay bullish for a little while. On the downside, I will recommend you to sell here at 82, but then 81.6 first support, and then 81 the next support. In fact, if it breaks below 81, 80.2, 79.8, 79.4 levels. Remember, till here we are not going to stay bearish till 79.4. Below 79.4, it is going to bridge the gap till 76. Take your trades accordingly. Yes, the first support will come into picture at 78.8, then 77, and then 76 levels, which is going to be the gap filling exercise, and beyond that it is going to drop further. However, I don't see it happening. I am probably still looking forward to a rise. It may retrace a little till towards, in fact, 81-82 zone, 81-80 levels, but then a bounce back is certain and it can recover strongly. Take your trades accordingly. Trade with the stop loss, trade with the trailing stop loss. Do not forget to like, share, subscribe and comment. Join my mentorship batch, join my Signal channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading day ahead. Thank you.